He's always been disagreeing with me. This is a 15, 20-year story. So joining me now is Commodities King Jimmy Rogers. First of all, welcome to the program.
I'm delighted to be here.
Pleasure to see you.
To disagree with you yet again?
Absolutely. It wouldn't be right if you didn't.
That's right.
All right. Now, as I understand it, you don't like U.S. stocks, you don't like the U.S. economy. You still like the commodity play, and you like a bunch of foreign currencies, yen, Swissy franc, and the Chinese renminbi. Fill us in.
Perfect. Well, you did it better than I did.
Yes, I know. I've done my
Listen,
homework.
first of all, the economy is not in good shape. You know that housing, you know that finance, you know that many parts of the automobiles, retail, you know that lots of parts of the American economy are going down the tubes. You also know that because you always believe the government. I know that the numbers which they announced today for unemployment and employment are nuts. They said that the banking sector and the insurance sector are increasing employment. What banks? What insurance companies are increasing employment? What retailers? And you know what they do? They have this little system that they use. They guess at the number of deaths and the number of births, and then they can adjust to anything they want.
I understand.
Wait. One last thing. You ask them how they do it, how they adjust for the births and the deaths. You know what they say? We won't tell you. It's a secret. It's a government secret.
It's a government conspiracy. There's no question about it. But I love a good conspiracy from time to time. Well, this is a good jobs report. There's no two ways about it. You have back-to-back GDPs, Jimmy, that were up 4%. That's the best in 4 years, for heaven's sakes. Outside of housing, I grant you housing is a mess. I grant you that. There is no bottom to it. And I grant you that Citi and Merrill and a couple of those banks did some very strange things with their portfolios. But having said that, those credit figures tell a story. They tell a good story.
Yes.
The rest of the system's working great.
No, the story they tell is that Ben Bernanke is printing money and throwing it out of helicopters, flooding the world with money. And that's destroying the dollar. It's driving interest rates through the roof, and it's driving commodity prices through the roof, and driving inflation through the roof.
We probably have some good charts on the bond market. The bonds disagree with you. 10-year bonds about 4.30. 3-month Treasury bills just under 4%. The Treasury market and the index-linked market are saying there ain't no inflation.
Larry, that's the short-term rates. That's what the Fed can control. Long-term rates are going up.
10 years, 4.30, Jimmy.
30 years.
When you and I first started arguing 20 years ago, they were about 15%.
Oh, my God, you're right. You have a better memory than I do. I just showed you. Okay, but Bernanke is flooding the world with money, and it's driving the dollar down. He is debasing the currency. He's on record many times as saying, I'm going to debase the currency.
I actually am pretty unhappy with the dollar. See, I think you got a good point. Why doesn't Master of the Universe? Let me ask you this. Henry Paulson, Master of the Universe, former Goldman Sachs bigwig. Every day this guy says a strong dollar is in the nation's interest, and every day the dollar goes down against some currency, usually the euro. Now, if you were running that thing as a Master of the Universe yourself, wouldn't you get angry if you kept saying one thing and the market did another? When's he going to blow a stack and come in and do something about the dollar?
First, he can't do anything about the money. The United States doesn't have any reserves. We have $70 billion of reserves. That would last 8 seconds in the foreign currency markets if we tried to support the dollar. There's nothing we can do. Even if we sold all the money, all the gold in Fort Knox, it wouldn't matter.
All those short sellers, isn't there a kind of mini bubble in the short selling of the dollar and a mini bubble in the long euro?
I hate to agree with you, but you're exactly right. There's so many people short the dollar right now, so many that there's bound to be right. The yen, everybody's...
Check out the dollar yen. That thing hasn't done anything in years.
I understand, but you're supposed to buy low. You don't want to buy something after it's gone up for years. No, that's the way my mother invests, Larry. She wants to buy them after they triple. No. When something's been going sideways for years, you look to see why. And the reason why is because of the carriage rate. The carriage rate, as you know, is you borrow at cheap rates in Japan, sell it, and buy something else. Well, I'm on the other side. It's all the smart guys, all the big hedge funds are dumping the yen. I'm buying it because someday that's going to reverse, and I'm going to make a lot of money if I'm right.
You still like the commodity game. I don't know if we have the Jimmy Rogers Commodity Index. That thing's just blasted off in recent years. You still long commodities?
Absolutely. Haven't sold a single commodity.
Any sectors you can tell us about?
If I were buying commodities today, I would buy agriculture. Agriculture is still terribly depressed, back to buying low and selling high. Things like sugar, cotton, coffee, orange juice, these things are very, very depressed, and the fundamentals are changing. That's where new money should be going, not into banks on Wall Street, not into investment banks. You should be going into commodities.
Gold?
You should become a farmer. I own gold. I own gold.
Where's
I've also
gold
gold this week. I own gold. I own gold.
Where's
I bought some
gold
gold this
Where's
week.
gold? I think gold's in a bubble. I really do. It's a bubble.
Well,
Gold, the euro, and energy are all bubbles. They're just bubbling around. They're going to get slammed. A bunch of momentum traders are all going to get killed.
Well, right now, again, I hate to agree with you, but right now, yes, there are huge amounts of speculations in gold. You look at the commodity charts, the commodity reports of the government, huge numbers of speculations.
You think you're a bull on oil prices.
Listen, in the bull market for the next 10 years, oil will go over 150, it'll go over 200. That doesn't mean it won't go down for a while. We always have corrections. But Art's exactly right. Listen, you're supposed to buy low and sell high. Japan is low. Japan is cheap. You're supposed to buy that way. Don't buy things that are up. No, I understand that, but no, to Larry's point, it will correct somewhere along the line.
What's $150 oil going to do to the world economy?
Well, in the 70s, oil went through the roof. Oil went up 10 times. We had hard times, but a lot of people made a lot of money in the 70s if you knew what you were doing. That's going to happen again. And the people who owned commodities in the 70s got really rich.
I know, but you know what's really interesting? In the 70s, oil and commodities went up, stocks went down. In the 2000s, oil, commodities, and gold are going up, and stocks are going up. Don't you think something's changed here?
Stocks
it's a different view. It's capitalism worldwide.
Listen, I'm very much in favor of capitalism, but for goodness sakes, stocks haven't done much in the last 8 or 9 years. Sure, they're up, what, 9% this year? That's not up. Oil is up 50% this year. Look at gold. Look at real commodity. Wheat is up 50% this year.
Jason Trenner, financials buy home builders?
Well,
Such a thing possible?
I'm short home builders. I'm short Fannie Mae. I'm short investment bankers.
They're down 55%. You're short the home builders?
And they're going to go down another 55%.
Really?
Yes. I mean,
I think that's minus. That's -5.
No. Something can go from 100 to 55, and then from 55 to 25. That's down another.
I got
it can go down a lot.
I got
now, listen, when you have a bubble and then it gets cleaned out, it takes years to clean it out. These things aren't buys yet. I'm still short. And by the way, I'm short Citibank too. It's an interesting proposition. If they do change management this weekend, I'll have to cover Monday morning.
You own utilities.
I do own utilities.
Why do you own them? It's kind of boring, but it's an interesting play.
They're all going to be taken over. There's a shortage of power developing in America. And small utilities, it's now very easy to take them over. You could buy 2 or 3.
These boys pay dividends?
Of course,
at the 15% tax rate
They're
for us
boring.
investors.
You said it.
At the 15% tax rate on dividends. Utilities good play?
Yes, well, the tax rates are good.